Welcome to the Titans of Industry Show. I am very pleased to have a returning guest, Mr. Jim Rogers, a legendary trader and investor from Wall Street. And although Jim doesn't like all the flattering comments, he has done phenomenally well during his lifetime, and we always appreciate his insights on what's happening, especially during one of the most unprecedented times in human history. Jim, thank you very much for being on the show.
I'm delighted to be here, Leo.
Many have compared this crisis to 1929, to 1987, to 2000, to 2008 for various reasons. Obviously, with the scope of the sell-off, the speed at which it went from all-time highs into bear market, the amount of selling and everything else. But there are many things that make this more unique than any other of these previous sell-offs, bear markets, depressions, etc. What is similar and what is different between this COVID-19 crisis and ones that you've seen before in your own life, in your own brokerage account, in your own career, and ones that you've studied? What would you say is unique and different?
Well, Leo, when they go down, it's all the same. If your stock goes down 20%, it doesn't matter why it went down 20% or 50%. You're suffering and you're hurting. Yes, there's always a reason. The first reason is the stocks get too high, whatever it is, the commodities, whatever we're talking about, get too high, they get extended, and along comes something to prick the bubble. It's happened throughout history. This time, U.S. stocks gone up over 10 years in a row, the longest in American history. They were extremely expensive. There's no question about that. At least in my mind, there's no question about that. So you had two ingredients right away, long period of time without a problem and extended valuations and a lot of enthusiasm. So the stage was set. And then usually when something like that happens, something comes along. This time it was the virus, at least that's what gets credit for it. Could be other things too. But the virus came along and caused a lot of people to panic. Remember, Leo, the American stock market made its all-time high in February. It's only 2 months ago. It was at all-time highs. Other places had started seeing problems, but the U.S. was still up. The virus came along, let's attribute it to the virus, and stocks collapsed. Well, stocks collapsed partly because there was huge amounts of debt everywhere in the world, especially in the U.S. And when you have too much debt, it sets the foundation for things to go down a lot. You had high valuations, along came the virus, and here we are. Stocks collapsed. Certainly among the fastest that I've ever seen. I think probably in August of 1914, they may have gone down that much because everybody in July was wildly enthusiastic still. And then the war actually happened. I'd have to go back and check. But, this was certainly a serious collapse. We've seen collapses like this around the world in markets in history. Here's another one. It's probably not, I know it's not the first, and it's certainly not going to be the last.
What I'm wondering is people have made comparisons to 1929 in terms of there was an initial sell-off like there was now. Then there was a very strong rebound like there is now. But for the next 3 years, stocks kept collapsing. And all in all, in 1929, there was almost a 90% decline in price. 1987, very different. There was an initial sell-off and then strong bounce, and it never looked back. So very different situations. And then the Fed actions are very different from 2008. Now you see both monetary and fiscal stimulus. They've basically gone in and bought the entire Russell 2000's debt, all the junk bonds. In a world like this, where literally there is no bond income anymore, are stocks expensive? And if they are, and obviously bonds are much more expensive than stocks, then where is the value, and And is real estate the alternative investment here for income? Where is the comparative value when you look at all asset classes?
Well, I don't think you'll find much comparative value in the U.S. Maybe some farmland in the U.S. might have comparative value and yield as well. You certainly could buy farmland in Russia or China if you're eligible to buy yield and get yield. You might try Russian government bonds. They have high yields, and the ruble is probably hitting bottom. Chinese bonds, but the Chinese didn't go nuts like the West and Japan and cut interest rates to zero. There's still interest rates in China. The Chinese government has started public works and spending money, but nothing like Japan, nothing like the US, where the central banks and the governments went absolutely bonkers. So there probably are places around the world, but they're getting fewer and further between.
Jim, I want to ask you about a phenomenon that might happen post COVID-19. About 62% of the world's transactions happen in the US dollar, and we know that about 50% of US dollars are outside of the American banking system. And it was always been argued that this is one of the reasons why the US can issue so much debt and currency, because it basically exports a lot of the inflation had it stayed within the U.S. banking system and create a velocity of money within America. But now we're going to see thousands and thousands of factories going back to American soil, jobs going to come back to American soil because of distrust with supply chains being global. Do you believe that this will have an effect on the U.S. dollar, obviously coupled with what's happening right now with all of the Fed business loans and monetization of debt, etc.? Is this a start of a bear market for the U.S. dollar? It's been rallying for about 8 to 9 years here compared to other currencies.
I'm a little surprised you say that this is going to bring manufacturing back to the U.S. The U.S. is the largest debtor nation in the history of the world, and it's extremely high-cost place to do business. But maybe you're right. Maybe plants are going to come back, but I don't know how they're going to be competitive, because the U.S. is an extremely high-cost place to do business. But let's assume they come back. The other side of this coin, Leo, is that many people, everything you said is accurate, but that's causing many people to say, well, wait a minute, this is not fair. Let's use that word. They use worse word, that the U.S. has this monopoly power, and if they get angry at somebody, legitimately or not, they can destroy you. They can say, okay, you can no longer use U.S. dollars. Well, that's not what a reserve currency is supposed to be. That's not what a medium of exchange is supposed to be. So some countries are starting to try to come up with a competing currency, a medium of exchange to the U.S. dollar. Russia, China, Brazil, Iran, even India. There are people starting to say, look, this is no way to run a world with one country. And if a few bureaucrats get angry at you, you're out of business. We need a competitive system. So they have started. It is making progress. I mean, most people never heard of it yet. It's not common, but there are competitive forces at work to lessen the role of the U.S. dollar. Now, having said that, I own a lot of U.S. dollars at the moment. I'm not talking about something that's going to happen this week, but I own a lot of U.S. dollars for many of the reasons you just said. People are looking for a safe haven. Whenever there's turmoil, people look for a safe haven. And for historic reasons, many people think the U.S. dollar is a safe haven. It's not. It's not, Leo. America's the largest debtor nation in the history of the world. But people regard it as a safe haven, and that's why I own a lot of U.S. dollars.
Understood. I want to ask you about the Fed's balance sheet and what it means for investors and for basically savers around the world. When the Fed creates so much new credit on its balance sheet, and when it monetizes the U.S. Treasury's bond issuance by purchasing these bonds, uh, over time, who are the uh, people that get hurt the most, and what should they do in response to this? Because obviously, we all know that this is an all-in moment for these central bankers. They have literally gone on 60 Minutes and said we have an infinite amount of cash at our disposal, and they have surprised markets again and again with what they are able to do and what they're willing to do this time around. Um, I would love your comments on what is the best, who are the segments of the population that are most hurt by this, and what should they do and what should we do about it?
Everybody who's an American is going to be hurt by it, especially somebody young. I've got young daughters. It's going to be terrible for them, but it's going to be terrible for me, and I'm an old guy. It's going to be terrible for you, Leor. In 1920, the UK was the richest, most powerful country in the world. There was no number two. And the UK set out and did a lot of things like what we're doing now, and not even in the top 25 anymore. The value of the UK currency is down over 60% over the last century. I mean, if you lived in the UK, your standard of living has declined enormously. I mean, it's still there, don't get me wrong. A lot of people having a lot of fun, but it's nothing like what it was before. And my poor daughters, and if anybody who's young is going to face more and more problems going forward. I don't particularly like saying this, but unfortunately, I know history and I know economics, and I know what effect this is going to have. And by the way, this would have been totally inconceivable as recently as 20 years ago. No, even when Greenspan was there, I don't think even he could have come up with something so absurd and outrageous as to print staggering amounts of money, buy bonds, buy everything in sight, junk bonds. In Japan now they're even buying stocks. The Japanese got everything changed. They used to buy just ETFs and bonds. Now they're buying stocks as well. That will come in the US too. This is all very unsound economics, certainly unsound banking, but it doesn't matter. It's happening right here in front of us. We've all read about MMT, modern monetary theory, which of course is absurd. But when things go wrong, politicians and bureaucrats look for excuses and new things to try. They're doing it. We can sit here all day long and show them that history and economics shows it's absurd. It doesn't matter. It's happening, and it's going to happen. So if you're young, you should be very worried. If you're old, you should be worried too.
Is there an ideal asset class that protects from the dilutive effects of these policies? What would you say is a prudent move for the next 2, 3, 4, 5 years as it stands if they continue on these policies? And I've heard President Trump saying that he wants to issue a 50-year bond with a 0% coupon and to fund infrastructures and everything else. You're hearing this from all government. It looks like they're all acknowledging that this is a race to the bottom, and now what do you care? Because there's going to be some sort of restructuring down the road, and you can obviously print currency right now and get it to the businesses, get it to corporate America, get it to the people, and let things roll. So I really want to make sure that I understand. Is this an inflationary nightmare that ends with some sort of a restructuring? Are we at that point?
Well, we have had inflation in the U.S. The government's lie about it, as you know, but in recent years, the last 3 or 5 years, it's been hidden by the fact that the price of oil collapsed. And since the price of oil is the single most ingredient in all of our lives, inflation seems to be subdued. And certainly it is, because oil is down. But is that permanent? I doubt it. I doubt very seriously if oil is going to stay at $20 or $30 a barrel for the rest of our lives. We will have inflation again. The way you protect yourself, Leo, is first of all, you watch Wealth Research Group, or you stay with what you know. People should only invest in what they know. They shouldn't listen to me or anybody else if you want to survive. In every period of collapse in history, some people have come out way ahead. And those were people who knew what they were doing, stayed with what they knew, and invested accordingly. After the great German nightmare inflation in the early 20s, some guys came out unbelievably rich. Some people came out of the Great Depression in America unbelievably successful. But they were people who stayed with what they know, found opportunities, and invested. So I'm not going to tell anybody what to do, because you should listen to other people. You should stay with what you know if you want to come out of this alive. Yeah, I can tell you, agriculture is going to be better. We're all going to continue to eat. I can tell you that traditionally in times like this, gold and silver, some silver right here, gold and silver have been good refuges into places like times like this. I also told you I own the US dollar. I own a lot of US dollars. That doesn't mean you should own US dollars. I expect the US dollar to get very overpriced because the turmoil is going to be great, might even turn into a bubble. But Leo, if you don't know how to buy US dollars or what I'm talking about, for goodness sakes, don't go out and buy US dollars or gold or silver or anything else. Just because these things have done well in the past and might in the future, don't do it unless you know what you're doing.
That's great advice. Obviously, within your capabilities. And I want to ask you about the election coming up this year and what it means for the future United States. We've seen President Trump now every day in the news, and it's helped his approval ratings. We see Bernie Sanders has dropped out of the race, and I want to ask you: does another 4 years of President Trump being in office, does that mean a lot to the economy? In other words, do you feel that President Trump has had a determining effect on the trajectory of the U.S. economy thus far and from here on? Or do you think that any president has marginal effect on how markets behave and how economies operate? How much of a role does fiscal policy have?
Well, Mr. Trump certainly, the executive in the U.S. certainly has an effect on fiscal policy. He also has an effect on monetary policy. For some reason, he seems to have scared the Federal Reserve. And of course, if he appoints enough people to the board of the Federal Reserve, he'll have a lot of influence on monetary policy as well. So he has certainly had an effect. He's spent staggering amounts of money, borrowing lots of money, cut taxes. He's had a big effect on the American economy. He may also have a big effect in a negative way on the American economy going forward. As I said, the U.S. had gone up for longer than any period in American history, partly because some of the things he did turned into a bubble. So, I mean, if he's going to take credit for the good times, he's going to have to take credit for the bad times too, if and when they develop.
Jim, do you believe that there is a way to balance the books in America by cutting entitlements, by postponing them, by capping them at age 80, by doing any sort of a situation, by delaying them to age 70 so that they can begin later, etc.? Do you think that any politician will touch entitlements? Because obviously, between Medicare, Medicaid, and Social Security, those are the three largest expenses of the federal government, aside from defense, education, and income security.
Well, everything you just said is correct. But if you are a president, a candidate, and you ran on those platforms, you're going to lose a lot of votes. So it's going to be difficult for you to get elected if you say to all the old people, boy, too bad for you. You know, I think old people vote even more than young people vote because they have been around and they know the consequences. So you could try it. You could try saying everything you just got through saying. I doubt you would be elected.
Very interesting. Jim, in closing, you're right now in Singapore. Could you tell us a little bit about how things are looking in that tiny little island that is managed to have different policies than practically all other countries in the world for the last 50, 60 years, and has been a phenomenal success in any regard? And what's happening around you in other Asian countries?
Oh, it certainly has been a great success for the past 50 years. We can discuss the next 50 years if you want, but if you're right about the last 50 years, most Asian economies and countries seem to have done a better job in recent years. We know that the major Western economies are all huge debtors. Japan is too, of course. It's copied the West. But for the most part, the Asian economies have done better. They're not huge debtors. They've certainly handled this virus better than we have in the West. So far, so good. Just because so far, so good, though, Leor, don't worry about the past. You got to worry about the future if you want to survive. I live in Singapore. I'm quite happy here. I don't plan to leave. But let's see.
Jim Rogers, thank you very much for taking the time today.
My pleasure. Thank you, Leor. Let's do it again sometime. Thank you.